Hi there. Thanks for tuning in. Today we're going to be doing an analysis and valuation of Bristol Myers Squibb, ticker symbol BMY. So let's get started. Now, what do? They are a pharmacy company, a pharma manufacturer. They manufacture all different sorts of treatments, mainly in oncology, cardiovascular stuff. They have a new schizophrenia treatment, so they have a neuroscience division as well. And they just reported their third quarter 2024 performance, which is a lot better than the same quarter in 2023. So we see this growth, we see it's looking good. We see that obviously their growth portfolio, even though it's smaller, is growing more, but even their legacy portfolio didn't decrease. So that's good. We want those legacy drugs and treatments to be a little more sticky, of course. And they have new stuff going on. So they have this whole schizophrenia treatment that got approved and it's now going to be distributed, and that should be a lot of future income as well. So it's this one, Cobenfy, and this is going to launch in the US in the second half of 2025. And 70% of schizophrenia patients are just not well managed. So this is a huge potential disruption opportunity, of course. So their near-term milestones also have a bunch of stuff in oncology and immunology, etc. They always have stuff in the pipeline, and they actually have a few images in their investor presentation of just how much stuff is in phase one, phase two, etc. So they constantly have a pipeline of new drugs coming. This is important because some of them are not going to work out. You want those few big hits that can address a huge market of patients that may either not be treated at all or not be treated correctly or could be treated better. So that's that. Now, their composition of revenue, they have a huge growth portfolio. Some of these are from acquisitions, and these acquisitions gave them extra growth here. Some of these are legacy. So 1% growth year over year for legacy, about 18% growth year over year for the growth brands. So that's very important. It's very good to see. Now, their cash flow from operations this quarter, it did amazingly. It had been decreasing a little bit, but still very healthy cash flow numbers, you know? Now, their debt position is a little high. $49.8 million is quite a bit. Even if you remove the cash, it's still quite a bit. But their operating cash flow generation has been really decent. And here they're also talking about returning cash to shareholders. So they have a dividend that is honestly pretty dang huge for a pharma company. And they are still going to keep raising it, you know? So that's very important. They also have an authorization to repurchase 5 billion shares. So we'd love a company that not only pays us back a dividend, but also buys back shares so that our ownership is worth more and more every time. And they also have a strong investment grade credit rating. So that's wonderful because that means that they get less interest on that huge debt that they have. So, so far, so good. Now let's talk about the long-term financial outlook. So as we see, revenue has been growing a lot. This big jump, usually when you see jumps like this, that's an acquisition. And then they sort of plateaued a little bit after 2021, a slight decline. This is projected to now keep growing again, especially in light of some acquisitions that they've done and some approvals that they've had. The net income is here and there. I mean, they have tough years. This is to be expected with pharma companies. Sometimes when they do an acquisition or a divestment, all sorts of different things, net income can be a little wacky. That's why I like to look at free cash flow. And thankfully, the free cash flow picture is a little more stable here, and it's projected to still keep being stable. I love the fact that it's always been positive because there's plenty of cash money that the business then is generating and can allocate to different things. Okay, so I want to do two different comparisons here. Also, so there's the debt to free cash flow. So we see that there used to be more free cash flow than debt. Now there's way more debt to free cash flow, but they're closing this margin little by little. They're closing that margin. And assets and liabilities, they've always had more assets and liabilities, of course. Now it's a little weird because they've divested from some things and the liabilities are up a little bit, but they still have way more assets than liabilities. So I'm not too worried about their balance sheet or their ability to cover their obligations, of course. Now, let's do a discounted cash flow model. So what I'm forecasting here is basically a fair value with 11% rate of return and a 3% perpetual growth rate. Ignore this 2% here. And what I'm saying is from their forecasted revenues, I am going to take 25% of that, which is a little less than they've been converting to free cash flow lately, but I want to just be a little bit conservative. And from there on, there's a tiny decline in revenues in 2024. Onwards, I'm going to grow it by just basically 5%. Now, all this added together at a required rate of return of 11% divided by the total number of shares out gives me a fair value of about 70 bucks, 69 bucks and 40 cents. But if you subtract the net debt, which is quite a healthy chunk there, then you get a value post debt of $55.16. Now let's compare this to the current state of Bristol Myers Squibb. Okay, so $54.49, pretty close to their 52-week high of $56.20. But if you look at the longer picture, I mean, they even reached an $80 level around 2022, and they've been declining steadily since, even now that the trend seems to have reversed. I mean, it still seems like quite the steep decline, of course. So there's many things to show here. First of all, their 52-week high, you see articles, for example, where the stock roared to a new 52-week high, and that's amazing. But at the same time, the longer picture is they've been higher. If you're a long-term investor here, you may not be super happy. So you have to keep looking at the earnings. That's the importance of it, of course, and also to know when to get out and when to get back in. I personally started buying around here at this 50 level, and then I bought some more at this low 40s level, and I'm pretty happy with it right now. I don't think I'll sell it, even though it's getting close to the fair value, because I think they could be surprising with the cash flow generation that they can make. But should you buy it? Well, let's talk about the risks and rewards. So the risk is that the debt position isn't the best, although it has decreased over time. And well, the Federal Reserve could move interest rates back up or could just keep them as is. And then when they rebalance it, they will be at a higher interest rate. Valuation is also a little high, but longer term views show that it can reach further highs anyways. And then pharma is just an industry with a lot of competition, with a lot of high growth companies as well. We saw with Novo Nordisk, with the creation of Ozempic and all this, that GLP-1 can disrupt the space. So it's more of an opportunity cost that this is a risk because you could be investing in other companies if you want to do your research and look at that may have some drugs in the pipeline that may really disrupt the industry. So it could be overshadowed by competitors, maybe not with direct competitors, but by other stocks that will perform better because they have novel treatments. Now, the reward is that the latest acquisitions have kept them growing at a great pace. I think they've done a good job at, yeah, grabbing some debt for those acquisitions, but at the same time, it has sped up their revenue and free cash flow generation. And the legacy drugs have held up really well, so I'm not too concerned about that. They also have a huge pipeline of upcoming products. That's amazing. And then the dividend and stock buybacks means that in the long term, you're rewarded anyways, especially with that compound interest. So, patience reveals the best opportunities, really. If you're patient, maybe Bristol Myers Squibb would be a great opportunity. If it goes back down and dips to the 40s level again, buy it. If it goes to the 80s level again, maybe get rid of it if you think they haven't fundamentally changed that much from this analysis, for example. But there will be buy and sell points here. I think it's a very strong, very interesting company, and I can't wait to see what it does in the future. If you watched this whole video, thank you so much for watching. If you want more like this, remember to subscribe and hit the notification button. It helps me a whole lot. With that said, thank you so much and have a great rest of your day.